Hey guys, Court here from The Simple Trade, and today we're going over high probability trades. Okay, I'll be going over a few things on the board. Later on, we'll wrap up with some trading view charts of trades that actually happen. But I want to go over a few things, a few prerequisites to be a part of these high probability trades. One, you got to look for the high today or the low today and see how price reacts off of it. It's going to do one of three things. Go with the trend, go against the trend, or range in between the highs and the lows. All right. High volatility sessions. You want to be doing London and New York sessions. Those are the highest volatility sessions. So you can grab a consistent 50 pips a day, 100 pips a day. I myself like to trade the Dow Jones, the US 30. Okay, that consistently gives like 100 pips a day. Okay, but it's a little dangerous if you're a new trader. Money management, okay? This is a prerequisite for any trade, not just high probability trades, but a lot of traders, they either over trade or over leverage, if not both, okay? That's why you need to stick to one or two sessions. Make sure you're not a trading zombie looking at the chart all day because, it's kind of like, trading is gambling. It's kind of like a casino. As you see, casinos have a science behind keeping you in the casino. The more you're gambling in the casino, the more chances you're going to give them that money back. Just like the charts. The more you stare at the chart, the more of a chance you're going to give that money that you made. You made some money during London session, you give it right back in New York session, and then during Asian session, you in the hole, okay? So you don't want that. Just in and out of the market, all right? Lastly, observing the range and spotting the price zones, okay? When I say range, there's a cycle in the market, okay? First, it starts in the range, making a high today, lower today, and trading in between. Usually that happens during Asian session, why I don't like to trade it. It goes in the range, accumulating contracts called accumulation or distribution, all right? After it accumulates the contracts based on traders in the market, it makes its move, okay? After it makes it move, starts ranging again, makes another move, range again. You wanna see how it reacts off of these price zones, okay? So let's get it started. So London session, 2 a.m., okay? Price starts to go down. It goes down, it makes a low, okay? Now, you don't see this yet, but you wait for it to go up and see how it reacts to this price point now. So it goes up and then it retests the low, failing to break it, and then going the other way. So now you see that it's a possible buy. You enter here and put in a modest stop loss right below the low of the day, okay? Now, along with your stop loss, the same time you want to know where your targets are going to be, okay? So, and you want to target liquidity, all right? So you only have this box to look at, but on a real chart, you have the far left to look at, and you're looking at price zones, all right? How the market reacted to different price zones. So this is what we see here. So this is the closest liquidity we have, and liquidity is basically stop orders or trade orders, pending orders you have in the market that will be triggered by by the market. So it's going up towards some liquidity. So this would be the first stop we're getting at. Boom, I'll take some off the table and then move my stop loss to break even. Why do I do that? I have some money. I got some money for my time, and just in case it goes this way, instead of losing money and making it hit my stop loss, I lose nothing. And in fact, being that I took some money off the table from this target, I got some money out of the session. Okay, I don't leave empty-handed. And then I just let it ride for the rest of the session and until it starts ranging, and then I'm out, because I know after it ranges, it makes its move. When it's done with the move, then it ranges again. Okay. As a matter of fact, for the sake of this video, I'm doing a 15-minute chart here, but I do recommend going down to the 1 minute for your entries and exits. Okay, I always go down to the 1 minute. Yes, I seen the higher low form here, but you also wanna go down to the 1 minute. You'll see it even. You'll be able to find a sniper entry to get in, but all that also goes for the exits. It doesn't just come here and shoot all the way down. It'll come here, start to stutter, retest again. As you see it doing that on the 1 minute, it gives you a hint for exit. So coming on 6 o'clock, the end of London session, I'm closing my trades, and then I'm taking a little break, okay, because I'm gonna come back for the next session 8 o'clock for New York. So I come back at 8 o'clock. What I look at, I see what happened while I was gone. Okay, it just like it was ranging after 6 o'clock, I saw it break the high, making a new high. Okay, come back down. So this zone, you're seeing this become a resistance zone now. And yes, it's resistance, just like just like support and resistance. This is support and resistance is not a strategy. You don't just trade just because like it just when it bounces off of resistance or support at any time. Support and resistance is a prerequisite for market understanding. Okay, don't get it twisted. Don't just use it as a strategy. Okay, so bounces off of this. This is the high of the day. All right, so I'm putting my stop loss here above the high of the day, and then I'm looking for my first target. Boom, my first target is this point of liquidity, in which the entry now becomes my break even. Okay, and then I ride it out until it starts stuttering and ranging. Okay, and then once again we're out the market, in and out, scot free within our 3 hour time period. Okay, I promise you. You have the discipline to wait, be patient, look for direction to be confirmed, as well as knowing when news is. You don't want to trade when news is coming, but wait for everything to be confirmed. When you enter, always put a stop loss. Okay. When something shoots up or down, don't just jump in. If you have the discipline to do that, you will be able to take part in these high probability trades, and you will be consistently profitable. What's going on, guys? Court here from the Simple Trader. I wanted to show you guys some examples of high probability setups, what I'm looking for, and how I execute the trade. Okay, so number one, this is the replay mode on Trading View. I love this mode. It allows you to go back in time and erase the candles, almost like you're trading live. Okay, almost. All right, this is second best thing. So first here, I'm in a 15-minute chart. I do go down to the 1 minute to for my entries and exits. However, because the replay mode, if I go to another time frame, it's going to reset the whole chart. So excuse that. I am entering on a 1 minute chart, but I'll explain as good as I can. All right, while staying in the 15-minute. But I have a 50 EMA, a 200 EMA, an 800 EMA. It tends to respect that. I learned that a long time ago. The banks use these moving averages as well. That's why you see it respected over and over. I'll go deeper into the indicators in another video. Although that's pretty much all I use, along with the kill zones, just signifying London and New York session, because those are the sessions that I trade. Okay, so let's get it started. All right, we're in the 15-minute chart, starting at 3 o'clock. All right, I like to start a little bit before 4 a.m. because, the moves tend to start before that. All right, so let's go. Right now, we're looking for a high of the day or a low of the day to be formed. You see it going down. All right, and those structures were already drawn. All right, so you see it hitting the low of the day. See how it reacts. It goes up. Okay, and as you see, I did enter the trade as it goes back down. So it created the low of the day, came up, came back down to retest, and then it starts moving. So this is where I take this high probability trade. Also, note that I am going into the 1 minute chart here, seeing for the higher highs and higher lows being formed on the 1 minute chart. That's why I execute, put a tight stop underneath the low of the day, low of the session, and my first take profit is actually about 50 pips, which is nothing on US 30, and then I'm letting the rest ride out to the next point of liquidity, okay, because like this is a point of resistance, but liquidity is above these points, okay. Stops, people, with pending orders, stuff like that. That's what the market tends to go towards, okay. So we use that for high probability trades, okay. So that would be the direction I'm going. So let's get it going again. All right, it's going up, and it hits that take profit, okay. So now when you're trading, okay, now you're going in it in a time frame, okay, and through my experience, these cycles are repeated over and over and over. Like I said, they make the high of the day, low of the day, and you're being patient, waiting to see what it does off of that, and every time entering a stop loss, okay. Stop losses is what keeps you in the game. All right, you're never going one trade is not going to make or break you. Well, it shouldn't break you. Yeah, the problem is a lot of times one trade breaks us, okay. That means that we're over leveraging, okay, which is one of the two reasons, one of the major two reasons that people lose trading. One, over leveraging and over trading, okay. So don't over leverage and don't trade all day. Just trade the major sessions, okay. You really don't need a lot of trades all day to become profitable. So anyway, so we're out of the trade on London session, okay. I'm not staying in it once it hits that, and this is 200 pips, by the way. I'm good for the session. Boom. We'll start another one from New York. Okay, so let's keep it going. It is now 2:45 the following day, Tuesday. Okay, let's start. Now we're looking for a high of the day or a low of the day to be created. Okay, so now we got some structure built in from Monday's Asian session. Okay, so we have a high of the day to go off of. Let's see if it plays off of that. It bounces off of it. All right, now it's going up again. Notice this, the 50 EMA there as well. Okay, so we call that confluence. So I enter the trade here. Okay, notice that so it's bouncing off of the high of the day 1, 2, 3, 4 times. All right, retest the high of the day at 4:15. Retest the high of the day, which is also bouncing off of that 50 EMA now. All right, and it goes ahead and makes its move. Boom. All right. And that was 100. That was 100 pips I got. And here once again, don't forget that I'm entering on the 1 minute. Now it started to do some stuttering at around 6 o'clock, and it's getting late for the London session anyway. That's why I just got out, and it was 100 pips, even though it looked small. That was 100 pips there. All right, guys, so those were a few examples of some high probability trade setups. I showed you what to look for on the trading view chart as well as the board in the beginning. If you have any questions or concerns, please feel free to ask me in the comment section, shoot me an email, and as well as ask me about anything you want me to go over in the future.